elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, YouTube? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground. Welcome again. So we're going to talk about my next play, Revealed. All right. And we're going to do a stock analysis, my intention on what I'm going to do with the equity and strategy and timing and price target and all that good stuff. We're going to get into it. So ticker is AIRO. AIRO Group Holdings. This is a defense contractor that trades on the NASDAQ for currently $8.50 a share. Market cap is $266.08 million. This is a company that's located and headquartered in Albuquerque, New Mexico. And pretty much what they do is they have a 4 business model source of sales, overall big picture. However, it is premature and it is in the works. We'll talk more about that. But right now, the biggest thing and their biggest driving growth factor of, sales is drones. All right. So this is a company that's selling combat drones to the US and NATO allies and etc. All right. Very small company, 151 employees thus far. There's a factory that just opened up in Phoenix, Arizona. So I anticipate more employees will be hired and so forth. We'll talk more about that in a bit. But let's go through the valuation sniff check. Let's look at their balance sheet and etc. So 266.08 million market cap at what is trading right now. Debt looks like 14.68 million and a net cash position of 83.49 million. Enterprise value brings us to 197.28 million. So enterprise value is pretty much essentially your market cap, subtracting or adding debt and cash balance on the ledger. When you buy a piece of stock in a company, you're also buying the debt and you're buying the cash as well. That comes with the actual company. All right. So more enterprise value is relative. If they have more debt on the balance sheet, enterprise value is going to be more expensive. If they have more cash on the balance sheet, enterprise value is going to make it cheaper. All right. We'll go to the actual financials on the statement. Steady growth here year over year. All right. Little stagnation of growth right here in this transitionary period from 2024 to 2025. And that's a transitory year where they got the infrastructure build out and raise capital for this new factory in Phoenix. This company has IPO June 9th of 2025. Very premature, very new to the market, trading on that NASDAQ. But I assess a lot of potential. I've marked them the winner. We'll pull up my portfolio, and as you can see, here's my AIRO position. If you've been following along in my channel, this position was blacked out. All right. I wanted my Patreon to get first dibs on it. We're noticing a dip due to the lockout period on December 12th. And essentially what a lockout period is insiders have to wait a certain amount of time after the equity trades on the market in order to sell stock. All right. So I'm anticipating some insider selling, just taking some chips off the table. Let's look at insider ownership. All right. Looks like 12.79%. Okay. So decent amount of insider ownership. Not too much, not too little. I'd like to see personally a little more than this. I'd like to see about 20% for this type of industry and actual growth stock, if you will. But 12.79% all in all is good. All right. So management team looking very good. A lot of experience in there. Dr. Kathira is the executive chairman. Now, this Dr. Kathira guy, I've done research. He has not been very successful in a lot of ventures, but a lot of those ventures had to do with healthcare. completely different business model, infrastructure, and so forth. I think that, certain personalities and certain strategies of businessmen are tailored towards certain business models. Okay. So just because he didn't do a good job in the healthcare department on some startups doesn't mean he's not going to do a good job on some startups in the defense industry. Totally night and day difference. It's like comparing apples to oranges on steps that need to be taken for success and so forth. All right. Joe Burns, this guy's got a pretty good pedigree in the avionics field. Um, so, I mean, I think that he's a little bit on the older side, but I think plenty of life left to do this. 40-year veteran on aviation technology sector, so forth, and worked at United Airlines and so forth. So there's that. Chief financial officer, stepping stones for her career. I mean, this is more of a, this is her chance to get into a NASDAQ company, get involved and experience growth and play a role in that key driver. Okay. So let's talk about some business model. All right. So, like I said, here are the four segments. All right. They have a diversified set of business segments, to the market and the naked eye, and how people perceive this company. They perceive this company as just a drone company. All right. Yes, the majority of their sales are coming from drones. Okay. And we'll take a look at the polarization in the business segments. But this is the big picture, guys. All right. They're going to sell drones, avionics systems, and parts, related to those systems, and they're in military commercial training. And these three segments are monetized right now. And then your final segment is where things get very interesting: electric air mobility. These are electrical helicopters that will be sold to the military. Some of the key features of these electrical helicopters is you can swap out the actual cargo bay to tailor transport of military equipment, weapons, ammunition, medical supplies, whatever. Okay. And then you can re-swap out the cargo portion of these helicopters to transport passengers. Um, the long-term vision of these electrical helicopters with their patented slow single rotor technology is they're very simple, they're sweet and to the point. And the real exciting part is several years out. I believe that these electrical helicopters will be autonomous remote control full size helicopters. We're talking about helicopters that can fly into hot combat zones where bullets are flying without a pilot, and this type of product offering and contribution will save lives in the future. All right, that's several years out of the vision, but that's what I foresee. Plenty of TAM on each segment here. Even though commercial and training is a lower TAM, this is a very high margin sales segment. So one thing I love about the training segment is it is fast growing, but it's high margin. And regardless of if it's peacetime or wartime within the countries, um, training is automatically always going to be a necessity. All right. And a driver during peacetime, there's always going to be training happening. All right. So there's that to consider. One thing that I like. All right. So let's look into the details of the actual sales segment. It should be down here. Give me a second. Bear with me. Let me see. Bear with me. Here we are. All right. So as you can see, drones make up the majority of the sales of this business model, and avionics and drones are, training is on the lower aspect, and the avionics systems is on a little bigger aspect. But nevertheless, we are at the crux of just building the foundation for this business. And I think that long term, what is the long term vision of what we can see this company being? I view them as a young Raytheon of the new generation. All right, with the actual warfare in Ukraine and Russia, drones are dramatically enhancing the landscape of victory. Okay, Drone warfare is the future, and my thesis to this company is rearmament and modernization of military equipment, and the way the battlefield is going to be landscaped towards and postured towards is that of autonomous drones and so forth. Okay. So I think that's pretty much my long-term thesis for this type of company. All right. Other companies that are in drones, a lot of them, I assess their stock and their business model are one trick ponies, guys. Not this. All right. This is going to be a whole big picture. Not only are we going to get the drones, we're going to get a whole nother phase of growth, leading year on and year out into the electrical vehicle or electrical helicopter segment. All right. So with the actual new building of the factory in Phoenix, the actual IPO and capital raise covered that. Okay. So investors coming in right here at this level within the cycle, the factory is already paid for. So the investors coming in are not paying for that factory. What the investors coming in and what's priced into the equity is really just, or a lot of the risk is priced in already, but the actual phase of the journey in which the investor is coming in right here is really the execution of that factory and the actual pending of the certification of this blue UAS cleared list. They need this certification to go through in order to start bidding on military contracts, filling orders, and so forth, and passing security clearance and Department of Defense stuff. Okay. That's projected to go through next year, middle of next year, I predict. And meanwhile, where's the growth of sales actually coming from? Well, the growth of sales is coming from a foreign entity in combination selling these drones to a NATO initiative to support Ukraine. So a lot of the drones that they are already in the sales mix of are on the battlefield and battle tested right now. Okay. Um, so there's that to consider. What is the value proposition of this company? Growth. This is a growth stock. This is a growing company. We'll look at analyst consensus estimates. Look at the growth rates here. 40% revenue growth next year, 50%, and then another 50%. And then 2029 is yet to be seen. That's a little far out, where the projections get more hazy. But I believe that 2029 can bolster another 50% with better execution and with good execution and so forth, and tailwinds. All right. So here's the general thing that I look for personally as a growth investor. All right. If the market cap is 266.08 and my enterprise value is 197.28, my sniff check is, can they revenue their sales in 5 years? Well, and apparently by 2028 we're revenuing our sales to the market cap. All right. We're revenuing sales to which we purchased the company at those levels. Okay. So that is the actual pricing of the sales and growth and so forth metric when the company is not profitable. Decent gross profit margin, net income margin is teetering along the lines of profitability. However, I assess these margins are not codified. They are not established. All right. The next segment of growth and launch of that growth is going to come from those electrical helicopters. So the margin setup is displaced right now within the equity and the business model. I expect margins to get hit more and so forth. So I will have projections out there on those margins moving forward as we follow along with the company. Okay. But all in all, the beauty about this company is as the company scales and gets bigger, the contribution of training revenue will incorporate margin tailwind contributions for margin expansion as a whole for the total package. I like the fact that Wall Street just can't say this is a one trick pony and this and that. I got 4 different segments. As averse to these other drone stock companies, I foresee the street turning on them, creating a bear narrative, and pretty much calling their one trick pony business model a risk. All right, and then the street will turn on the other drone companies and slash their valuations like crazy. This provides a lot of defense against that. All right, so I assess moat due to their different business, their four different business segments and different cycles of growth to come. All right. If you're getting value out of this, check out my Patreon. I'm doing deep dives on this company already. $10 a month, you really can't beat it. 7 slots remaining. Okay. All right. Learn from a lot of high advance growth investors, benefit off a community, get more direct access to me. You can request deep dives on other companies. And with those deep dives, I include price targeting, research, slide decks, all different types of stuff. I do a whole video on it and cover the company, and I project out either gains or losses. Okay. And that's one thing that you can take to the bank, or the credibility aspect of it is if an investment is garbage, I'm going to say it's garbage, guys. I'm just going to keep it real and honest. All right. So thank you for that. All right. So my intent with the position, we'll pull up the portfolio. I got 3,000 shares. I called a bottom right here on a V shape here, at around the $7.50 mark here, which actually it did hit that bottom. Now, with the lockout period expiration and some shorts coming in a combination of insider selling, which is yet to be reported yet, I assess there may be an opportunity to get in on the high sevens range near cost basis. If the actual street tanks this actual equity, I will be adding to my position, and there is a slight chance that I buy call options. All right. We'll look at the ratings consensus estimates from the street. On the low range, they got a year out target of 19. Mid range target is 21.33, and the high range is $25 a share a year from now. Granted, they have to execute on this actual 40% growth metric. All right, which I think they can, and I think they will. Do I agree with the ratings on the street? I'm more on the high side. I got them doing 25. I got the price at $25 a year from now. With a 3,000 share stake, we'll pull out my handy dandy calculator. 3,000 times 25, $75,000 equity stake with the growth provided. All right. So that's my take on the company. I hope you guys got value out of this video. I appreciate all my supporters and everybody following along. Y'all mean the world to me. I love y'all, and take it easy.